November 11th. All the veterans out there. Just going over, I wanted to go over this. I made a video last week. We are going to adjust a few things, but as you can see, I had a measured move here at 21,304, right? Bullish into a trading range. We did kind of, we're broken up. This is above, this is the top half of the range, this is the bottom half of the range. As you can see, the midline is being respected. You can't really say it broke below for the swing up, but we did though, right? We broke below and we trapped these sellers below the swings here. We have some swings there. Let's see, make sure this is recording properly. Where's OBS? All right, yep, we're recording. So, bullish into a trading range, we rotated below, and then things. I look for the rotational swing. So this is our rotational swing. What rotates below rotates above. So rotational swing is somewhere up here, 21,287-ish. That's going to be our rotational swing. As you can see, the open, last night, we gapped up a little bit and then we continued to rally and we took out that 2187. The other thing we're looking for was a measured move. I had a measured move potentially coming in here at 21,304. That was potential based off of, let's see, 21,304. Let's see where we were looking at if I do that. We were somewhere around here yesterday, on Friday, thinking that, okay, hey, this is our first, is this our second pullback going to be our measured move? But no, we ended up, I look for the first leg and the third leg on these break. Especially when it's chopping like this. It's chopping, but it's chopping up, making slightly higher highs and slightly higher lows. But what that does is it gives you the second leg, right? All the orders consolidate inside of here, come back down, usually on some sort of a liquidity sweep, trapping some of these sellers that they continue to add in, and then they can't do it. And then once we stop them out, we get that nice move. A lot of orders came through here. This is a 4,000 tick chart. Each candle is 4,000 transactions. So you have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 4, 5, 6, 7, 28, 29, 30, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 6, 7, 8, So what I'm getting at is, you know, on a 5-minute chart, on a 1-minute chart, you don't really know what is going on. But these, you could say, you know, you don't know how many the transactions. You don't know what the transactions are, right? You don't know what side of the market the transactions are. That's where you got to look at order flow. You got to look at your levels. You got to see who's in charge. But 61 transactions, 61 candles times 4,000 transactions. We had 244,000 transactions occur, right? After this move up. After this, we had 244,000 transactions occur, and then we gapped up, stopped them out, and here we are now on the third leg. So the way I look at these legs, and then we're going to look at the next leg, right? You can say this leg is one leg, pull back, two leg. So if we pull back to here, you know, that's about a second leg, but we didn't quite make it. The third leg starts right here. That's where the third leg starts, because you have your first leg, Gonna look a little different on a 500 tick chart. So with that being said, right, let me back up. ADD kicking in here a little bit. We're gonna go right to that level right there. This is our measured move. And that's somewhere around the 21,318. What do I have it on this one? 21,324. You know, give or take, because you're going to have to, but this is based off of a 4,000 tick chart. 4,000 tick chart, I'm seeing it's about 21,318, right? That's based off of the 4,000 tick chart. If I go to the 500 tick chart, same thing. All I did was copy and paste everything. The only difference on this one is I can really see exactly where the move starts, where it ends, and where the next leg is, right? And that's where I was just showing this. We have our first leg up is the measuring leg. You pull back. Second leg is this. You can see that it's not a breakout leg, right? This is our measure, and then we're looking for the breakout. Making slightly higher highs and higher lows. It's not a breakout leg. What you want to see is after this breakout. The third is going to be the breakout leg on these moves. And I've gone over that before, and I just wanted to go over that again, right? The third is the breakout leg. And sometimes you get this, right? You get this move up. You get this pullback. You get about an equidistant leg up out of the range. And then you pull back, and then you get the breakout leg, right? And this leg here will tend to be a little bit shorter than a measured move, right? The measured move might be here, and it pulls back and then goes. So what we have going on right now, we have our first leg up, pulled back. This choppiness all the way up here to this high is our second leg. Second leg, this is our first leg, and then this is our third leg. So all I did was copy the first leg, the measuring leg, put it here at our low to go up, and here we are somewhere about, let's see, it could be down. Doesn't hurt to put more than one level on your chart. I like it down here, 18. There we go. I do like that. So 21,318. We're going to go with that one. 21,318. That's going to be our measured move, right? That's our measured move target, measured move hit. Measured move hit. And as you can see, we came back down, and now we're starting to rotate back down. But now that we know that this is our first leg, pull back, second leg, measure the first leg, copy it for the third leg. Now we know that this is the trend, right? This is not the intermediate trend because we're overall bullish, but this is the short-term trend on a faster time frame. We do have a bigger trend moving up, but we know since we came up ranged, came back down here, rotated below the range, and then we start our next leg up. Overall, this could you see what I'm saying? Like we could be trending up, pulling back, trending up, right? This could be a higher time frame setup, but intraday and the time frame that I trade off of, this is what I'm looking for, right? This is the trend. Now that we have that going on right now, we're going to just take this, bring this to the high here, right here to the high, right to this wick, because we know that's the high of the first leg. Now let's go ahead and look to see where we are at this level here. Okay, we're up here. We didn't reach the high of the channel, but the channel is being respected on the bottom, right? Wicked right to it. If you watch the previous video, I had this channel on here and charted all this stuff and then just left it. Now, I will be watching to see if we come back down and keep respecting this channel on the way up. I'll be using the midline, like I said before. We used this midline the other day to say, okay, hey, yeah, this is the midline, and we're going to use that to kind of correlate to where the high is going to be, which matches up nicely here at the high here. Midline, midline, midline. Battles around the midline. We stay, don't diddle in the middle. So we got that going on. We might see a rotation back down to the top of this range. Okay, and when I say we might see that, because let's look at a higher time frame. We got our breakout of the range. We never got our retest. Right? We might continue higher and higher and higher and higher, but we could come back down and retest, right? So when it retests the bottom of the range, I'm looking at a couple different things to happen. Are we going to V-bottom? Are we going to V-bottom at the bottom of the range? Are we going to V-bottom at the bottom of the range and then start, making our way back up here like this? And if we do, traps, those are what I like to trade, right? JJ says this. This is not my strategy. I got this from JJ. He's a little bit of a crazy man. Just watched some of his videos, kind of resonated with me because I've been trading off tick charts. But they're, the traps. You just look, take these swings. Where the swings match up on this trend line is where you want to go. So if price comes down, it traps in those sellers. Find your entry type of setup after trapping them, and you can scalp long. Okay, you don't make a new high. Let's say it comes all the way back down. Swings. Potential fourth leg up. So that's what I look at, and that's what I'm going to have here for this trend line. So that's one setup. V-bottom, and then see if we start grinding up, right? V-bottoms grind because you're going to get sellers timing tops, right? V-bottoms, it comes down, and then V-bottoms, and then it grinds up, right? It's kind of impossible to get in. Do you know why it's grinding up? It's because if you watch the order flow, if you watch Bookmap, if you watch, you can see the sellers are timing the tops. So what happens is after it V-bottoms and it squeezes all the sellers out that are getting trapped below this level here, thinking we're going to continue down, all these sellers down here get trapped, right? All those sellers get trapped. And when they get trapped, squeezes and just starts grinding. But the initial squeeze is the sellers down here trapped. Okay? Now, when it starts to grind, that's when sellers, I call them dumb sellers, or they're impatient. They start to they start thinking, okay, this is about to go down, and they short. Right? They short, and they're weak-handed. They're shorting. But guess what? Buyers are like, hey, this is the way the trend's going, so I'm going to start buying. And because we're V-bottom, this is a strong move up. So the buyers start buying, and then what happens? They stop out those sellers that shorted in this area right here, and then you get that little squeeze up. Then what happens? It doesn't continue, because what do you have? You have those dumbass sellers coming in like, oh, this is the high. Yep, they're trying to time the high. And then they start shorting. They can't bring price lower because buyers are coming in, and then boom, pops up again. Stops them out. Where are they putting their stop losses? Right? These dummies are putting their stop losses right above these previous highs. Every time they put their stop losses above these previous highs, what happens? Price just hits it, stops them out, that little bit of momentum, and those breakout traders come in, and price goes. But you know what? That's all you have left. Then you got to wait for price to retrace back down. So that's one setup I'm watching. The other one is, you got the V-bottom. The other one is just watching sellers trying and they can't bring price lower, right? You'll see a reversal setup, or you'll see like something like this, where you immediately start seeing on a lower time frame a market structure like this, right? You'll have you'll bounce, and you'll make a high, a higher low, higher high, higher low. Then you'll just kind of continue, right? And usually after that, after a couple times, when they make this pattern here, you'll stop out the sellers because there's going to be a lot of sellers coming in here. You might get that nice little move up. Then you can continue. What else we got going on here? The other thing is a reversal setup. This is a reversal setup, right? You get a pullback, sellers try, they can't do it. Buyers come up, break this high, they come back down, and when they break below here, all they're doing is creating that trap to continue. You'll see it just find this setup, right? Comes down, comes up. All right, let's draw it the way it should look, right? You're trending down. You're trending down. You're trending down. You don't make a new low, but you break above here, right? Price tries to come down. Where's the best spot to go long? Right there. Be in before that break. Because when that breaks, now you have a change of, you'll be flagging up, but you at least get in early for the next move. Now, the best one that I have found is this, right? Oops. You get this type of formation going. This is a great reversal setup. You start getting this going, you're trending down, come up, break this swing, and it looks like it's going to trap, right? Because that's a trap. But then you stop, and then you go. Breaking that one, and then you continue. So if I zoom in on this chart, right? I'm going to zoom in on this chart to make it a little bit easier of what I am talking about at this spot. So if price comes down, I'm just like going over what I'm expecting and what I'm looking at for today, right? If we don't hold this level here at this trend line, if we don't hold that trend line, I'm looking to potentially break below here. If you break below here, what is that? You're going to sweep the liquidity, and you have more liquidity here, and you have more liquidity here. But what does that do? That's just a trap setup because you're making these new highs. Anytime you sweep the liquidity and you don't get continuation down and it comes back up, it's just trapping all those breakdown traders in this level, right? All those breakdown traders. All right. What I'm talking about is this, right? You're going to, if this forms, there's a specific like reversal pattern. It's just like kind of a market structure changing, right? All right. Say price bounces. Okay, we broke above this high. Now, if you're bearish and you are expecting price to come back down into this range, maybe test the midline, break below here, you're going to start shorting here. This is where the best risk to reward for shorts, it's going to be in this area above this swing. All right. Now, so let's say you shorted there. Price comes down but fails to make a new low, right? Fails to make a new low. And then price comes back up. When it breaks here, when it breaks this high, that we know sellers are going to put their stop losses, right? Sellers are coming down. It breaks above this swing. Sellers are going to short up here in this level, hoping to take out the low. And if they cannot take out the low, this is where they're going to put their stops. Sellers are not going to, like, the sellers that are late to the party don't want to risk these swings up here. It's too high. They're not smart enough to come in up here. They're late to the party. That's why they're coming in down here. But, okay, at least they're smart enough to come in here above this swing trying to get that move down. Hopefully they're smart enough to take profits knowing that this is a scalp. It's the location of the short is not the best. Down here. Better up here. But if you are coming in, the best way to get in is a trap. This is the trap setup for the shorts right here. Now, price has to break a new low. If price doesn't break a new low and continue this structure down, all their stop losses are going to sit right above here. And when that happens and break it, you tend to stop all those sellers out and you get a little bit of a squeeze up. And when you get that squeeze up, you look for the pullback. Loves to retest this level. And if sellers continue this down, sure, fine. Maybe on a higher time frame, they were looking to take out some other levels and bring this price lower. But if it retests here and holds, that's when you look for the next leg up. Okay? You want to break a prior swing right here, fail to make a low, and then where those shorts came in, stop them out at the pullback. You want it to hold and then continue. I hope that's making sense, right? This is basic price action. The reason why that setup coming in down here like this is what I would that's how I would go long here. And the reason why I would go long that way, right? Because you're breaking above this swing. You're stopping out these sellers. Looking for that pullback and that move, right? Breaking the market structure, and then we're changing directions based off of market structure. The reason why I would go long in this area based off of that, right? If you wanted to be a kind of a breakout trader, you just put your breakout right here. If you wanted to anticipate it, you can see based off of order flow down here. But the location is key. We are potentially bouncing off the top of the range. Look to the left in this area. Top of the range right here. If you look to the left, what is it? This is the gap, the overnight gap. So this is a great spot that you know buyers are going to be. Whoops. Let's readjust. Let's take this off, copy it from our other chart, and put it back on. Didn't lock it. Let's lock this. So you know buyers are going to want to come in and defend the top of this range. Now what happens? How would I go short here? Right? How would I go short? If price comes down here, price comes down, and we get those buyers. Let's actually draw a structure, right? Let's draw a structure. Price comes down. You get those buyers trying, and you stop them out. You want to, or what I will do is I will look for the top of this range to get taken out, and I'm not putting my stop loss up here. My stop loss is not going to come up here. If I'm doing a breakdown trade, my stop loss is going to be right here, tight, and I'm looking for a fast and hard move down, a fast and hard move. We have the previous area. Remember, we discussed this area here, that there was how many orders that came through there? 244,000 orders, because we had 61 candles at 4,000 ticks in that area, right? 61 candles on the 4,000 tick chart in this area prior to the breakout. So that's a lot of buyers coming in here. Between what, here and here, there's a lot of buyers. I think, yeah, here and here, or whatever. A lot of buyers coming in here. So this is an extremely strong buy area. It's also a range. Ranges like to flip positions. You can have buyers buying here, price breaks higher, and as price breaks higher, they're just shorting. They're covering, covering, covering. When they're done covering, what happens? There's no more liquidity. And then price starts to find new liquidity down in the range. So that's how you look at that. All right, I'm kind of getting in the weeds here. ADD kicking in heavy. How would I short this? Okay, if I'm going to short this, I am, like I said before, maybe you can get that trap. Price comes down. If you miss the trap, if you miss the location here on the trap, you can short here. Stop loss just above the range. That's how I like to do it. If you come in on a trap, you have to break a low. If you short up here, you got to break this low and continue, and price has to continue lower. So let's say you shorted up here, price continued lower. What are you going to do? What would I do? Am I going to leave my stop loss all the way up here in case we bounce and come higher? No, I am not going to leave my stop loss there. I'm going to have my stop loss is going to go right above this range, and I'm going to start trailing it down because we know there's a ton of buyers here. They're going to want to bounce this back up. Targets on this, right? That's how I would do my first type of, right, trap there. Let's say target's going to be midline for one. Majority of profits should be taken off at the midline. Bottom of the range for the rest, maybe all of it at the midline. Expect a test and then go down. But the issue with this is there's so many buyers that price might continue lower. And when we hit this midline, you might think when you hit the midline it's going to retest and then go lower, but instead you just blast up, right? That happens a lot. This midline's a very powerful thing when you get the range break and come back down. That midline is very strong. Take profits at the highs and the lows, right? If you're shorting up here, let's say you got a short here, you want to take most of your profits off here because the probabilities of bouncing and continuing higher is way, way more likely now that we broke the top of the range. Now, continuing short, after that, I would need to see price to break down and, we might chop up in here, but I need a convincing, let me show you what I mean. Let's put my chart on here. I put this over here on this 4,000 tick chart. I would need a convincing. Don't chase the stop run below this range. Don't chase the stop run below these swings because that could be a higher time frame pivot or swing. I am looking for sellers to prove they are in charge, and then I'm going to short off the structure. And when I mean short off the structure, I am looking to short based off of market structure on a channel. So if price breaks down, and sellers, we retest and they prove it, I'm going to go ahead and start drawing some sort of a channel down that I could, short off of somewhere down there. Preferably in traps, because if I'm going short on a bullish market, I would love to just have price come up, trap above here, and then continue lower at some sort of a channel structure, right? Then I know exactly how far we got to go, break the lows, come down to the channel, the bottom of the channel, and then go from there. Yeah, we can continue to dump and break down. But I need sellers to convince me. If we rotate below the range and below this area here, which I put as buyers invalidate below because it was a seller trap. Sellers are trapped because we came up higher and all these little small swings here, we broke below them, trapping all the sellers down in this area to start the first move up. Then sellers just stepped out of the way and buyers were coming in. Sellers were, all these buyers are like, listen, we're going to start taking profits. We don't know if this is going to rotate back down. But yeah, I just need sellers to prove it. I'm not chasing. It's not the market to chase short. Promise you. Until when? They convince you. So that's it. That is how I would short it back to fade the range. My two setups to go long. And if I was to continue shorting, they got to prove it. I want to see some sort of ABC type of pattern with lower lows, lower highs, and potentially a like a measured move type of situation, right? If we break down, I want to see that first leg come down, retest. Maybe we get a measured move. Maybe we get some sort of a measured move, this leg, down to there. Maybe we rotate. Maybe we do the rotation of the swing high. Since this swing was taken out, let's bring this up here. Take our rotational swings off. And let's go ahead and take this off. Copy this, paste this, bring it below, right? So now I'm looking at a rotational swing somewhere down at 21.068. 21.068. That's our rotational swing right here. So we could come down here, retest this level. It's Monday. Let's Veterans Day. Let's just be patient, right? But now I have targets. I have the middle of the range, the bottom of the range. I now have my seller. My swing, my rotational swing down here at this level. I'm gonna take this off. Sellers are trapped. I'll put that there. But this is my rotational swing. So now I have a target somewhere down here at 21.067, 21.068, something like that. So now if we do hit the midline, hit the bottom of the range, I got a runner. Obviously, we're looking this swing here. That's the previous low of this move in the structure, the current market structure. But we have a rotational swing down here. So more targets on the downside. With that being said, I don't really have much else to say. This channel played out nicely. The range and the rotation played out nice. Our measured move played out nice, which is right there. And then we came back down, right? Our measured move played out very, very nicely. Let's check one more thing. We're going to check this. We're going to copy this, and then we are going to adjust it. Let's widen the channel. Let's bring this up. Now what do you see? We're respecting the highs of the channel and high of the channel, high of the channel, high of the channel. All I did was connect these lows now. Okay, so now we have another potential channel. What do we have if we do come back down? Ooh, we might have two areas of support. We have channel support. We have channel support. We have range support. And look at this. This is where those buyers got stopped for that move up. If you look to the left, look at this. Resistance. Potentially might become support for the move up. See what I'm saying? This is what I like to do. I like to correlate my charts to ranges, to channels. Structure, market structure looks good. Okay, yeah. Are we due for a pullback? Yes. And if we do pull back, what do we have? Look at this. All these sellers, if they short below here, If they short below here, all these sellers are going to be potentially trapped. And that's why I like to say this area, I'll be looking for buy setups to stop out those late sellers, or buyers to try, not have enough momentum, and then sellers to bring price back down here to the midline, bottom of the range, down here at this swing, and sellers trap. Okay, yep. Down here at the bottom of this swing, and on my 4,000. Look at this guy, huh? My background changes every day. It's kind of funny. Where is, oh, there's my 4,000 tip. Right down here, right? So that's our swing and our previous rotation below the range. That is going to be, so you have your midline, your bottom of the range, right here at the rotation below, the initial rotation below before the move up. That's going to be a location for profits, and profits down here. Then we find our measured moves, see if the measured moves play out, and if we're going to continue and get an intermediate bearish trend for a larger time frame retracement. Okay, that's everything going on in my head right now. I hope it wasn't too much, but I'm going to post this anyways. I like to do this for my own analysis and kind of, just give my little feedback to myself and speaking out loud. And if you guys don't do this, sometimes speaking out loud, creating a video on it, typing it out, journaling it, all of that, it helps you learn your setups, hone in on your skills and your craft of trading, and get you, really processing things better. It's one thing to answer a question out loud, speaking it. It's another to write it down. So that's why I'm making this video. It's one thing to sit here and look at the charts and in my mind say this is what's going on, this is my setup, blah, 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 blah. And it's another to make the video and then play it later and then see if my analysis was correct. And then I can go ahead and kind of burn all of this into my brain with what the market's doing. So that's it, guys. Good luck today. That's it. Hope you guys make all of the monies. Later.